Hey guys, what's up? Stock Retail coming back to you today. As you can see, I just want to take a revisit to what AMC would be valued if we just took a hard business case, just objective data-based view of the stock price. This is normally how many people invest, especially value investors. You would mine for value across a variety of tickers, analyze the financials, and kind of decide what a company's worth. That is the Warren Buffett way, as an example. Um, and that's the way he has made a whole heck of a lot of money. So one of the things I think that I see out there a lot on AMC is, there's various types of, let's say, channels, and YouTube or X accounts or Facebook accounts. There's obviously the hype channels who are chasing clicks, and then there's somewhere at the other extreme, there's negative channels who are trying to sway sentiment. I have always tried to be somewhere in between. If you followed me for 3 years on Twitter, I'm all AMC. I'm definitely a bull. I'm long. It's pretty much my whole portfolio. But I also try to stick to facts, stick to data. That's the point that I believe we're countering. We're not just sort of fighting for our stock that we love. I believe we're also fighting for kind of truth and transparency in the stock market. And so I tend to just try to lean real hard on providing you information that you could fact check yourself. And I always say here, no trust me, bros. But what's really great, so first of all, I got asked quite a bit here on YouTube and on X. I don't know, over the past month or so. Hey, retail, could you revisit valuation? If you followed me for a while, you might know that you could already go find a couple old videos on this, probably 6 months ago or so, maybe longer, looking at AMC's valuation and what the stock price would be based on metrics. So people have kind of asked me to revisit that, and so I sort of wanted to do that for myself and just to kind of answer that question for some folks. We've obviously had some more dilution too, so that plays into the math. But we've also had a lot of new quarters of results, so that helps us know what our sales are, what our future earnings are, that kind of stuff. So we're going to look at that. And the thing is, as we go through this, this is why I really don't mind just sort of sticking to facts and not having to create false hype, because the facts, in my opinion, are mega bullish. So I'm in some ways giving you the punchline already of what we're going to see. But let's go through that. And also for some of you, I know I've got some followers who maybe aren't as well versed in finances. So I like to kind of explain kind of what we're looking at. So we're going to do that. All right. So first, there's a few metrics you just want to understand. And you could also go back. I've got an entire video just on price to sales, this first metric. So you could kind of go back and see that. But just to run by them real quick. So price to sales is a metric, and you'll see this if you just use any, like your broker app. You could probably see this metric on a variety of stocks. And what you would learn if you just kind of went to sort of Google this or whatever, search this up on the internet, you're going to see that generally there might be two, let's say, business cases or thesis scenarios where you would use price to sales as a metric to decide what's the value of a company. Um, the first one is kind of for startups. A lot of times maybe a startup might be a real exciting play. You believe in the future of a company, but maybe they haven't turned around to having positive earnings yet. So as long as they've got the cash to survive, they've got like venture capital investments, things like that. A startup can be a great investment if you really understand the thesis and believe in its future. And so you can kind of value it and say, all right, based on at least their sales and their sales growth, what might this be priced at? But price to sales is also a really healthy metric, or a really useful metric for turnaround stories. Now, that is exactly what AMC is, right? So it got hit with this massive pandemic, full on closures, zero revenue. It may end up being, in my mind, the turnaround of all time. To go from literally pretty much zero revenues to surviving that when your competitors all went bankrupt is one heck of a story. And so that's actually what price to sales is useful for companies who have not yet turned around to positive earnings. And we're going to talk about that in about 10 seconds here. Not having yet full year profits, but are on the way to that. So it can be a way to value turnaround stories and startups. The reason for that is these next two metrics. You've probably heard of these. They're pretty common. So a price to earnings and a price to earnings over growth, a PE and a PEG ratio. Price to earnings, well, you've got to have earnings to look at it. Otherwise, you get some pretty funky numbers. Often you'll see maybe a negative number, or you'll see some really wonky numbers too. So price to earnings, generally, you only use that for companies that are having positive full year earnings, and then it becomes sort of a useful metric. I had shown you in a video before like the historic price to earnings of the entire S&P 500. You can go search that on the internet. The historic price to earnings and price to sales of the movie industry. So I kind of have those in my mind too. So go, if you want to see a little more background on these, you can kind of search up some past valuation videos of mine. I think there's two of them. One's specifically around price to sales, and one's just, I think it says like, what's AMC worth? But we're really covering those today. So the point is, price to earnings, you would look at, like for example, I don't know, maybe a year ago, I was looking at Disney, and someone was saying, oh, Disney's going to go up from here. And I was like, man, there's like 80 or 90 years worth of earnings priced into that stock. I don't think so. And sure enough, then like Disney had gone down since then. So that was kind of a useful way for me to know, was there actually value there or not? And so that's why you get into the price to earnings over growth, because there are companies who are growing their earnings really fast. So let's say there's a company and you see, wow, their price to earnings on their stock is like 50 years worth of earnings are priced in. By the way, for price to earnings, you basically just take the market cap of a company and divide it by their yearly earnings. That's roughly, pretty much what that is. Well, let's say it was a company who had grown their earnings really fast. And by the way, that's going to matter for AMC. We're going to talk about that in a few minutes. Think about as the box office recovers and as popcorn grows and distribution grows, AMC is a company that's growing earnings very quickly. So we'll talk about that a little bit. And so when that happens, you might see some funny numbers. Like if historically the S&P 500 is sort of, let's say, 19 to 20 years, if you kind of look over the last 100 years or so, you kind of get around a 19-ish price to earnings. Well, let's say you find a company, like I said, that has 50 as the price to earnings, but if they're growing significantly, then you can take a forward view. So the thing is, price to earnings is a backwards view. It's looking at the last 12 months of earnings divided by the current stock price. But if that's a rear view mirror with a company that's headed in an entirely new direction, then you probably want to look at the price to earnings in a forward view. Where are they going to be in 12 months from now? That's the PEG ratio. Let's take a forward view and value based on the growth rate. And then that could start to explain if you start seeing some funny price to earnings ratios. So kind of all of these, frankly, together can help you decide if a company is valuable to invest in. And you want to learn these things, like even for swing trades, I suppose not so much for day trading, but for any swing trades, for long-term investments, I ask myself, is there a thesis behind this company, and does the value make sense? You just kind of answer those two questions. So let's look at some price to sales comparables right now. So you look at Cinemark, obviously almost identical company to us, other than differences in size, difference on the balance sheet, which I think is important. We got to acknowledge that. So I'm talking about debt structures. Now, remember, Cinemark went through a bankruptcy. So their shareholders lost their shirts. I mean, you pretty much lose everything as a shareholder if a company goes through bankruptcy. So they went that route through the pandemic, went bankrupt, and then came out with a better balance sheet effectively. So they are healthier right now technically. They've had positive earnings, but they went through bankruptcy to get there. So you can see their current price to sales. I've circled that for you, is not quite 1. So what price to sales, by the way, you just take a year's worth of sales and you divide the current market cap by a year's worth of sales. So you can see up here their market cap is like 2.4 billion. Take their sales, divide that out, you get basically 0.87 as their price to sales. And then you look at IMAX, and so you can see IMAX, doing even a little better in terms of evaluation. Although that also really you want to say, oh, well, that means it's actually more expensive, is kind of what that means. It's valued much higher. You're paying a higher premium basically for that. So you'd have to decide, do I believe that it's worth that? IMAX is at a 2.3 price to sales. So you're looking at almost 3 times the price to sales of Cinemark. By the way, this is also really helpful. These are metrics that you can really compare stocks against each other. I see some apes who tweet like, I'm looking here at Cinemark at 19.3. This is just as of the moment. I snapshot this when I was preparing for the video. The market was still open as I prepared this, so if these prices are not exactly what it is at the time you watch this video, these are just snapshots as of today. But so you would say, well, Cinemark is, $19 and AMC is what, like $3. And so some apes try to compare the actual price per share. But remember, we don't have the same amount of shares in the market. And so you want to start talking about market cap. But that actually is going to be um, kind of a revelation as well. So if we look at when I snapped this, AMC was at 298 a share, and look at this price to sales, 0.099. So if IMAX is at a 2.3, Cinemark is almost zero point 0.9. So Cinemark's almost 10 times the price to sales of AMC. That's pretty significant. We're gonna talk through this, and then even if you look at the market cap, you all know that AMC has a higher market share, more doors, more customers, higher revenues in every single category. Whether you want to look at ticket sales, concessions, merchandise. Obviously, we have popcorn sales in groceries, and they don't really. So, for them to be a 4x on market cap, I compare market cap more than I compare stock price, or to be almost a 10x on price to sales. So you can already see there's some interesting comparisons here. So let's actually go through that a little bit more. So let's just kind of take these apart. So we just said, let's put them side by side. Cinemark at that 0.87, IMAX at the 2.3 price to sales, and AMC at 0.09 price to sales, not even a tenth. So what that really means is Cinemark has basically a year's worth of sales priced in, IMAX 2.5 years, and AMC basically a month worth of sales priced into the stock. It's pretty ridiculous. All right, so if you were to compare, and if you were to say, all right, how much are they trading at versus AMC? So you're saying Cinemark is basically worth 9 times AMC on a price to sales basis, and IMAX is at 23 times pretty much on that price to sales basis. Well, for AMC to then, if you wanted to even them out, if you wanted to say, all right, let's just get them all. So let's say AMC trading at Cinemark's price to sales. Let's make them worth the same. In other words, $1 of sales in Cinemark is worth $1 of sales in AMC, basically, is what you're kind of saying. Note, there's a key note here, and this does impact the math significantly, which we're going to talk about as well in a minute. We know that Adam and team just released the most recent dilution, where they're bringing in $250 million. So they've got to sell $250 million worth of stock. By my estimates, I've told you before, I think that's somewhere between 70 and 80 million shares. So note that as of today, I'm giving you numbers here on this slide, although we're gonna update that a little bit on some other slides here in a minute. At the current float, the 263 million shares. But it's my point of view, we got to add 70 plus million shares to that. So these numbers are not perfect, but I like to say on this channel, sometimes they're directional. Basically, regardless of whether we add those shares in or not, AMC would have to go up by a lot to trade at the same price to sales ratios as these other companies. And by the way, on an old video, one of those videos I told you about, I had shown you that you can find some sources on the internet that will give you an industry standard price to sales. I think that's probably including studios and some things like that. So it's not just, theaters. But the industry standard on sort of theatrical and entertainment companies is closer to 3. So that's also significantly higher, basically 30 times higher than our current rate. But anyway, so as of today, at least, ignoring the dilution, which we shouldn't ignore, we're going to have to come back to that. But as of today, AMC would have to be at $26 a share just to be on par with Cinemark, or it'd have to be almost $70 a share to be trading at the rate of IMAX on price to sales. And then just a note, because I had reviewed price to earnings and also told you that basically the historic price to earnings that I was looking at was kind of mid-20s. So in other words, someday in the future, if you can envision a time when AMC gets back to profits, and we're going to talk about that in just a minute, I'm going to show you the path to that and some forecasts on that. I was saying kind of like 24, 25 is a reasonable price to earnings for AMC kind of historically. First of all, AMC was there at one point pre-pandemic. If you go back, kind of look at 2018, I believe it was, that's kind of roughly where it was. And then the industry as well. And you can see that proven out here. So even though things are still bumpy right now, we know there's a strike impact this year. Cinemark is trading at 15 times earnings. So in other words, 15 years of earnings are priced into their current stock price. IMAX is at 35. So I'm saying I think mid-20s is reasonable. You can kind of see, well, that's about the average of these two. So I'm just sort of setting up how we're going to kind of take a look at this and talk about this. Before I kind of show you some of the forecasts, I've gotten a lot of new followers, so I just want to kind of bring you up to speed. We'll make this quick for the people who followed me for a while. So I have 2 masters in business. My last role a few years ago at a large Dow Jones company, I'm at a smaller company now, but for a while, for 21 years, I worked at a Dow Jones company. I was leading teams forecasting over $2 billion a year in revenue. So I know a thing or two about forecasting. That was like across 15 countries and just anyway. So enough bragging there. But just the point is, I have a background in this, and then let's just look at receipts. Like, what's the scoreboard say? All right. So for like the last 9 quarters, I have beaten Wall Street's estimates. In other words, I've been more accurate on AMC earnings estimates than Wall Street for over 2 years now. So check on my side. So that you know, I've mentioned before, maybe I have a spreadsheet where I'm looking at every single line item in what I call the P&L. That's just language I bring from my business background. Just means profit and loss, but really you could say the income statement. So I look at every single line item on the income statement. I've got them all captured in my own spreadsheet. I look at every single line in the balance sheet, and I've got those from 2018 until current, plus then all my forecasts. So I've got 20 quarters of actuals. Actuals just means, you could go fact check filings with the SEC, and I've got 20 quarters of all the line items of all that I took the time to put that all in Excel and track that stuff so I could figure out how to forecast this myself and spot our trends and spot history and where have we come from, what's our story, what you can see. I'll teach you guys someday, I keep promising this, how to read an income statement. You can kind of see between the income statement and the balance sheet over time what the strategies of the management team is, and you can kind of measure how good a management team is or not good. Pardon me. The most 3 quarters, so I've been over 98% accurate on predicting our earnings, so I'm nailing it. I called Q2 and Q3 profits of last year more than a year before they reported. I've still got the tweets and YouTube videos to, prove that. That's not a trust me, bro. You could go back and fact check me on that I had said those 2 quarters would be profitable more than a year before they even happened, and at a time when a lot of voices were calling me crazy and saying I was wrong. So, again, scoreboard. 8 quarters in a row now on the box office side. Been at like 97+% accuracy. Actually, that's a little bit of, there was one that was like 95%, but that was Q3 of last year when we blew it out of the water. So that's Barbenheimer beat my numbers. So I've not missed, to the wrong side. We've beaten my numbers in general. All right. So as I now share some forecasts, first so we've laid the receipts. We said, all right, this guy at least has some credibility. Another thing I like to say on this channel is don't listen to someone if they don't have credibility and integrity. So, I guess integrity, you've got to decide if you believe I have that. But I've got, 3+ years of, I don't know, showing my character publicly. So hopefully I've established some integrity. And then the credibility I just laid down. I mean, those are just facts. You could easily fact check me on those. So I want to actually show you now something that I posted last November in a video. So you could go back and see this, but I'm bringing it back because you're going to see some themes in what now Adam has started to tell you too. So it's just one more receipt to say, all right, I've been showing you what's coming before it happens. So a couple things that you want to know and you want to understand as I, in a moment, show you the forecast and then tie that to where I think our stock should be priced. In other words, someday, as long as AMC survives, eventually market pricing will take place. I believe that with all my heart. Just kind of laughing because, I see how much manipulation there is right now. And that's our battle, right? Okay, so before we get to that forecast and then you understand, why I'm so bullish, you need to understand some basics of AMC's business model. So first thing here, you can see on the top left, AMC has a heavy fixed cost model. So just think about things like leases, the debt. There are a few other line items in their expenses. So some of their biggest expenses are what you call fixed costs, which means as the box office grows, if you have a fixed cost model and you increase your top line, your revenue, but you don't increase your expenses, then incremental revenue is really, really valuable and starts to hit the fast forward button on your earnings. So that's why, and I started saying this in some of my earliest videos you can find in 2022. I was laying down why I believed AMC actually will be more profitable now than it was pre-COVID. And you've heard Adam start to say that. So I've been saying that since 2022, and I'm excited to hear him get to the confidence level of saying that. And just to be clear, he would have known that long before me. He's the one who actually made that happen. He's just now getting to the place where he's willing to say it more publicly, and so I love it. All right, so AMC has a heavy fixed cost model, so that just means think through. We went through the strike, but that's a one-time event, right? As the box office returns, which is why he's starting to say, hey, back half of 24, 2025, looking great. As the box office returns, AMC is just going to start flying. So when I show you my forecasts in a minute, I want you to have that in mind, because you may be tempted to say, man, how come he's showing that level of growth? But it's because there's going to be a lot of spots where we're bringing in revenue but not increasing our expenses, and that's going to be awesome. All right, so AMC has far greater operating leverage than 2019. I've done some videos proving that. I've got all the numbers on that. But basically, if you think of operating costs as a percent of revenue, because there are some costs that are variable. They go up, and like you've got to hire more people if you have more shifts to cover. You've got to pay the electric bill is higher if you keep the lights on longer because you had more showings. Those are variable costs. But our costs as a percent of the revenue we're bringing in is significantly better than in 2019. So Adam and the team have done a great job. So that's the point I guess I've already told you. As the box office increases, earnings are going to increase even faster than revenue. All right, so AMC has diversified revenue. You guys know all about that, right? We've got popcorn, we've got candy, we've got distribution, hopefully beer and wine at some point if Adam decides that's profitable, and we've got the Zoom, all that stuff. So, and merchandise growth. Like sometimes I forget to say that, but we sell more merch than we used to as well. So all of that is better than pre-COVID. And then by now, AMC's debt is actually lower than back then. So just what I'm establishing and what I had said all the way on this particular video, I'm stealing this slide from. I had said this last November that AMC did not need, you know, pre-pandemic box office levels to get back to profits. But now try to imagine what actually happens if we get to pre-pandemic box office levels. Well, now we're talking like mega profits. That's why you need to really understand all of this about our business model. And then so as debt is continued to be paid down, earnings are going to also improve because you now don't have these payments. Payments are getting lessened. And I said a lot too. Remember that 2026 debt, he's going to move those maturity dates out. He has started to say that as well. So bottom line, remember, I said this last November. So if you followed me, you already knew this now for, I don't know, what is that, 5 months ago. The end of 24, I said, AMC's back to profits. You can go check. I haven't changed this slide. These were the bullet points. I took out one number because my numbers changed, but that's on 2025 here. So 2025, I told you we'd hit full year profits. So what has Adam been saying lately? Back half of 24, 2025, look awesome. That's what I've been telling you all along too. So I'm just really pleased to see that hopefully I'm getting that right. And now he and the team are starting to see it, or to the point that they're willing to say it publicly. And he's got to be a lot more careful than me. I have a lot more freedom to say things. So that's why I want to really clarify. He would have known all this before I knew it. But just to see him get to the point where he's willing to, as an officer of a public company, to say this stuff out loud, it's mega bullish, guys. All right, so 2026, I'm even saying profits, could even start approaching $800 million, and we're going to actually show that in a minute. So back then, I had kind of said that there were some shorts who were talking about, oh, you're never going to get to profits, and I was like, hey, the last 2 quarters were both profits, so I don't even know what you're smoking. All right, so that was a revisit of a slide from November. Now let's kind of refresh everything. But final thing before we review the numbers, we got to just look at some assumptions I have so you can understand the numbers I'm giving you. I just really don't like to do trust me, bro. So I'm giving you some assumptions so that you can then yourself decide, oh, I think retail's too high or I think he's too low. And you can decide if you think these numbers should be better or worse. And then we're going to finally, in a moment here, get to what that all means to the stock price. The domestic box office in 2025, I believe it's going to be around 10 billion. In 2026, I believe it's going to be around 11 billion. I've always said you need to look through the actual list of movies coming out, have forecasts against all those movies. You can kind of flex up and down then on how much do people pay per ticket. Obviously, we've had inflation. That's something else I've been telling you for a couple of years, that inflation is actually relatively good for AMC because our prices go up faster on the revenue side than they do on the expense side. So that has proven true thus far as well. All right, so for our distribution and I note that I'm saying incremental revenues here. What I mean by that is, let's say with Taylor Swift, that movie we would have had revenues on no matter who distributed it. we would have shown that at AMC, we would have had revenues. So I kind of have my own process where I come up with what's the incremental revenue because we're the distributor. So we have this other cash flow coming in. And then in Taylor's case, we had higher market share. People came and saw Taylor at AMC more than they see some other movies at AMC. We had just a nice uptick in market share. So I have some real raw, rough ways that I calculate. And I say raw and rough because um, we don't know. Some of these lines I'm about to show you, I'm having to come up with my own guesses because until they're reported as their own line items, I mentioned a little while ago, my forecast process looks at all these line items through 20 quarters. And so I can get a real feel for how to forecast them. Well, some of the new stuff, you can't see me, but I'm smiling because I'm actually happy about it that we have all these new lines of revenue, but it also makes it hard for me to forecast because I don't have much visibility into them until Adam decides there's something called material and they're worth reporting. And that's fine. We'll wait for him to decide that they want to report on these separately. I'd love to see them, but I am perfectly fine waiting for him and the management team to decide when that's supposed to be. So what I want you to see here is you can see these are, in my opinion, tiny numbers. You can see I'm not giving much in terms of incremental revenue. This would be extra merchandise sales that we wouldn't have had. This would be those distribution profits we wouldn't have had. And this would be the uptick in market share. Now, think back to, we saw not long ago a LinkedIn post where AMC was hiring a vice president level of distribution. We know that Adam has been kind of talking about the phone ringing off the hook. We know that he just met with a bunch of, he specifically said directors and producers with that squirrel post, which I had some fun. I had a video some of you would have seen on our cash flows at the end of March where I talked about a squirrel gathering nuts and I compared the management team to that. So it was fun for me to see Adam then also use a squirrel. I'm not saying he necessarily took that from me. I'm sure he had his own message, but just fun for me to see the connection. And hopefully even a bullish signal there too, by the way. Okay, but so the point is, he said the phone's ringing off the hook. They've hired a VP. You could definitely look at these numbers I'm showing you and say, wow, if retail's only counting 16 million of revenue in 2025 and 18 in 2026 from this stuff, and again, remember, incremental revenue, over and above the same movies showing without us distributing them, then you could maybe say, hey, I think he might be too low and I'd go up. And that would actually be my point of view. I've just left those conservative until we know. Because I just haven't seen consistently. We had Taylor and Beyonce and then we've gone a little bit quiet. Of course, I know he says silence. Silence does not mean inaction, and I trust him on that too. All right, so popcorn revenues. I do have these a little high. Here again, almost wild guesses, guys, because we know we're in thousands of doors already. I'm counting Amazon itself as like thousands of doors, and then we knew we were in, I'm forgetting the number right now, but significant amount of doors in Walmart. And then just think of all the Kroger. I had shown you that's like 15 brands for Kroger. How many doors that is. And then if we start even having any other partners, if we ever open up in Europe, all those things. Adam at one point in an earnings call, I think 2 earnings ago, had said maybe in a few years that could even be a 9-digit, $100 million a year revenue. And so I think these numbers can be conservative, but again, until they start reporting them, I don't feel comfortable, honestly, I don't know. You could argue to me that these are over bullish, and you could argue to me that these are way too small. And I would believe almost both arguments. So I've just kept these numbers for now. Full year 2025, full year 2026, you can see roughly hovering around 50 million in popcorn revenue. Remember, that's a multi-billion-dollar business. So if you just even do some percent of market share and say AMC gets whatever percent you think we'd have, I think you could get to much higher revenue numbers on that. On candy, beer, and wine, thus far we don't have beer and wine yet, and there's no promise that's happening. So I just can't put much of a number in for that. And then candy is doing awesome. I love it. In particular, the chocolate-covered raisins are my favorite. I don't know, drop a comment and tell me which one you like the best. The rest of my family thinks I'm crazy because they don't like raisins. But for me, it's the chocolate-covered raisins. But let's just, be real with ourselves. That's only selling in the theaters. We don't yet, I haven't seen a plan to put that in grocery stores. I'm not saying that won't happen. And then it's only chocolate. Like, we don't have like other, I don't know, fruity candies or things like that. So I think it's amazing. I think it's awesome. And then the other thing you have to think through that also gives me a little bit of conservatism is notice again this word incremental. In finance, incremental means like over and above what you already had before. We were already selling, say, Raisinets as an example. So if I love the chocolate covered raisins, AMC was already selling chocolate covered raisins. We've just in some ways replaced some of the sales of Raisinets with AMC chocolate covered raisins. And Adam said that way back when he said we were going to do this. He said, hey, we're going to keep more of the margin in house. That's another finance term. It just means they get a little higher profits on selling their own chocolate covered raisins than they do the Raisinets. But it's not all what you call incremental revenue. So only the over and above part I'm showing you. And again, of all things, this is the most wild guess of any of them I have. I'm just saying in 2025, maybe that could be 10 million incremental revenue, in 2026, 15. That is napkin math, made up numbers, guys. I'm just going to be real with you. So you've got to decide if you think I'm too low or too high. And then finally, I'd love to keep making sure that people understand this. If you take the price of Hycroft on day one of any quarter, or really just take the price at the end of the last quarter, like the closing price, and then you take the closing price at the end of the current of this quarter. So like Hycroft has been up significantly the past couple of weeks. Well, now multiply by how many shares AMC owns. That actually shows up on the income statement. It shows up as revenue or loss. It can show up as an expense basically when Hycroft stock goes up or down in a quarter. So you just measure the movement across a quarter and then it shows up on our books. And so I'm suggesting, and by the way, in the last, I don't know, week and a half, Hycroft is probably, and you can't quote me on this one because I'd have to go really do the math, but I think it's like $4 or $5 million it's appreciated for us. And I'm probably off on that. It may even be a little more with today's move. So if you say, well, 40 million sounds crazy in 2025, but I mean, let's think about gold has continued to move. Hycroft also has been fairly suppressed. I do understand there's probably more dilution. I'm getting out of my zone here, guys. So forgive me if I'm saying things. If you're a Hycroft person and you feel like I'm saying something out of turn, I haven't done as much DD on Hycroft. I just love the fact that we own a gold mine and silver mine. So the point is, I believe I'd be fairly bullish on Hycroft personally. If we're talking about 2025, some of that is more than a year and a half away as they start mining, really pulling minerals out of the earth. As the money printer go burr continues to devalue the dollar, and gold then just naturally appreciates in value, that's going to continue to put upward price pressure, I think, on miners. So I'm pretty bullish on Hycroft. So that's in these earnings numbers. So finally, here's the actual numbers. Here's the bottom line. And then we're finally going to get to the stock valuation. So I have, like I said, every single line. I'm forecasting all of the expenses. I'm even forecasting income taxes. If you go bottom line, I'm forecasting about $350 million of profit, positive. Guys, think about how huge that is. Last year, we had the 2 quarters that were profitable. Combined, they were about $20 million. I'm saying on a full year, we could be at like $350 million next year. I don't know. You'll have to decide. Just look at these assumptions I just gave you and decide if you think I'm crazy or you think these make sense. And then 2026, I'm saying even as much as $750 million. So go back to that whole idea of that fixed cost model. And as we see the box office return and as we grow some of these other lines of revenue, you can see how quickly we're going to get to not just positive earnings, but like mega positive earnings. And this is also why I have not been concerned at all about the debt. It's why I say over and over, he's going to show banks that we have a path to profits and they're going to refinance with us. I just believe that strongly. So I'm going to use that 333 million shares. So I'm just adding another 70 million shares. It may be some more than that. Let's see where we land. I've told you I think it's between 70 and 80 million shares. But just because for some obvious reasons, 333 seemed like a fun number. So we see that number in all kinds of decoding and that kind of stuff. So that's why I was like, oh, why not? All right. So at 333 million shares at that earnings level, you can just see, let's just kind of skip forward here. So at a PE of 20, in 2025, AMC would need to be $21, and in 2026, AMC would need to be $45. So you can see you're looking at like a 6-bagger. And by the way, we're going to talk about the squeeze in a minute too. I'm just showing you straight up math. of what the price would be. Forget any squeeze. So that should also already, I'm tipping my hand, make you really bullish, because even without a squeeze, and just think of what that does to a squeeze then on to have pricing on top of this. So in some ways, I've skipped ahead there. But without a squeeze, even just based on math, AMC would be 6x in 2025 and 14x. If you invested in a share now, in theory, at just a price to earnings of 20, even with this significant growth rate, you would 14 times your money just by waiting a couple of years. So to me, that is also why I'm like, I can wait. I'm not leaving. I know this stock is undervalued, unless I'm just going to be wildly wrong about all this, but I just told you I've been right 9 quarters in a row. Why would I think I'm wrong now? All right, so at a price to earnings of 30, which is, because of our growth rate, that's going to feel fairly realistic to me, to be honest, because of, you can see here how fast we will be growing to flip this fast and this far with, again, let's say we start really taking distribution seriously or something, or popcorn expands significantly, or Highcroft actually grows way faster than this. So now you start to even add on top of this. But that would mean AMC in 2025 would be 9.5 times the current price, or in 2026 you can see almost 22 times at $68 a share, just on fundamental valuation. People like to kind of troll, fundamentals, whatever. For me, if I can objectively, with no hype, let the numbers tell me the story, and the numbers tell me we should be at these values, then dang, that gives me a ton of confidence to stick around. And that has always been the case for me. I've always kind of gone with thesis and data, and that has helped me stick around. At a price to sales of 2.5. I mentioned the industry standards more like 3, but that somehow feels a little high to me, so I just tried 2.5. You would see in 2025, we would be, based on just sales now, remember that price to sales, $45, which would be a 14 bagger, and in 2026, we'd be at $50, or 16 times where we are. So by any of these, the PE of 20, PE of 30, or a price to sales of 2.5, as long as you say, well, the guy's been right with all his forecasts so far and calling the shot more than a year out on multiple quarters, I get these assumptions that I've listed. I think I can agree with him, even just directionally, forget the exact number. Then you're looking at this going, man, $3 is insane. This stock needs to be way, way higher. That is why I like thesis and data. All right, so let's pick this apart a little bit more, and then we'll kind of move forward. So forecast risk. What are some risks to this forecast, in my opinion? So I've said quite a bit on this slide. These new revenue streams. I didn't even mention Zoom on here. I'm still kind of keeping Zoom real tiny. It's in the numbers. I have some numbers for it, but until I see real direction on that, I've just kind of almost, I don't know, just keep it real tiny. But anyway, all these new revenue streams, until Adam and team decide they're ready to share them with us in more detail, how much revenue are we getting? What's the cost of them? What's the profit margin? These kinds of things. What's our growth rate? What's our future growth plans? I'm having to make this up, and so are you. And so I think that perhaps I'm conservative, and that's why I have this plus with a question mark. It's kind of like, plus? So you're going to have to decide whether you think there's upside risk or downside risk to what I'm showing you here. And then distribution, I also think that's probably conservative. Geez, we made more money than this on just Taylor. We can beat these numbers, I would think. Just get a couple of, more documentaries or movies, a couple more concerts, and we'll, I think, crush these numbers. We'll have to let Adam give us direction on that, and he will when he's ready. I'm not pushing him on that. Global disruption. Look, there's just a lot going on in the world. I don't want to fearmonger. I honestly feel like we're fine. I think there's too much fear out there. I'm not a person who lives based on fear, but I have to acknowledge that, sure. And by the way, I'm not talking about recession. I've shared plenty of times on X, Twitter, whatever you want to call it, in the past. I've shown academic research. You can actually find like scholarly research. You can find just kind of news articles that generally in a recession, movies do very well because people are cutting large expenses. So if they can't go fly to the Caribbean or Hawaii, but they can still go to a movie, they're still looking for some escape. So a lot of times what happens is larger expenses get cut in a recession. but movies actually end up doing well. So I'm not talking about that. I'm talking about massive, massive global events. But nobody can predict that. And so I'm just saying, at least I'll acknowledge there's risk. And then foreign exchange, that's what FX means here. I'm not yet predicting. I do have actually in my forecast, maybe the euro and the dollar in particular, the way they move against each other impacts AMC's results. Because if you look at like Odeon and UCI and some of our other brands in Europe, our theaters, by the way, shout out to our European apes. Love you guys. Um, if you look at those, we translate our sales back to dollars. So if the dollar weakens against other currencies, then it actually kind of benefits AMC. You would see our Europe sales grow. But if the dollar stays strong against the euro, then, or say it goes even further, um, you could see that kind of take a bite out of our Europe sales in our earnings. And so I'm just saying FX, and by the way, same at that Dow Jones company. I mean, I even worked on a project where we were cutting our FX risk by billions of dollars. And so I worked with MIT economists. I was an operations guy, but I was leading the project. I'm not an economist. But these guys were like MIT economists who were hedging foreign exchange. So I learned a lot from them, just been exposed to some of that. And so I'm just saying, you know, predicting foreign exchange movements is not so easy. But that is a risk to the forecast. All right, so just the point is, and we'll come back to a summary in a minute. Uh, there's a lot of words to basically just say we're deeply undervalued, and I hope you just see kind of the proof of that. I'm going to just take a personal aside here real quick because something I shared on Twitter over the weekend. I kind of posted a post and then I had to delete it because I was trying to put a poll out and the stupid poll kept dropping from a post. And then some shills picked it up and decided to call me a grifter and, kind of try to pull my name through the mud. I say shills because two of the accounts who did it were actually all three of the accounts that I saw who did it have been anti-AA, anti-AMC. So I just kind of have no problem with them attacking me. But it does make me want to just share with you, and I've been thinking about this for a long time, like a year plus, that I am considering using some of my free time to analyze some other companies, some of the things like this, earnings previews, financial analysis, mining for like value plays or swing plays, some stuff like that. Um, just got stuff going on in my family, and so it's an opportunity for me to use my talents and provide for my family. So I will be probably soon turning on subscriptions on Twitter. I don't know, I'll just do like 3 earnings previews and a newsletter and some other stuff per month. Whenever I get to that, I'll make it more clear and announce that. So you'll see that from me. And I just want to acknowledge and just own up front. I understand we have a history of people being grifters in this community. We have a history of people selling super chats and fanny packs and all that stuff. And I hope that it's really obvious 2 things. One, that there are, I thought about it. I've been in this play for 40 months. So when I say 3 years, I'm well past 3 years, 40 months of me having consistent character over time. And so I just hope that people will look at, okay, I've seen who this guy is for 40 months. I don't now think he's some radically different person. So, you're just going to have to decide for yourself because some people just have an automatic black and white, oh, he's going to do subscriptions, I'm out. All right, you want to be out, that's your choice. But I'm not going to get into big back and forth debates and stuff. And I honestly do object to being called a grifter too, because a grifter is someone who takes advantage of a community, right? I have spent thousands of hours providing free insight and analysis and frankly taking all kinds of emotional abuse from shorts for, like I said, 40 months. I didn't do that. Uh, I don't know. It's hard to argue that that's grifting. So speaking of which, the second bullet here, AMC, there's no way I could ever in good conscience, it would bug me, to ever accept any money for what I'm doing for AMC. So you will not see that. I mean, sure, I have ads turned on YouTube, but I've always felt like that means YouTube is paying me from their advertising dollars. They were going to put ads on my videos anyway, so I'm taking from YouTube. I'm not taking from you guys. But AMC analysis will always be free. It will be my primary focus. I will not let anyone who does subs do a sub so they can like DM me more about AMC. Like that is just off limits. It's so that I can provide some financial analysis on possible other plays. That's all it's going to be. And I'm just gonna let you know, I sometimes we keep a lot of things close to the vest because I've also seen the people who try to hit you up with GoFundMe's and sob stories, and sometimes that's actually also been itself a grift kind of a thing. That I'm going to do this for personal and family reasons. I'm not going to share all of that, but there's extended stuff. You know, I take care of my in-laws. My kids are kind of getting to college age. There's just stuff that I, as a responsible, um, you know, father, husband, son, am going to need to do for my family. So if I can use my free time to use my skills and make some people money and they decide that's valuable enough that they want to pay for it, I'm going to be honest with you guys, that's going to be my business. I'm not going to let people tell me whether I'm allowed to do that or not. You know, some of you won't like that and some of you will unfollow, but that's where I'm at. Most of you, I think, won't even feel it because, you know, I'm going to be honest. I'm darn stubborn and I want to win this AMC fight. And I believe we're honestly fighting darkness. I believe we're fighting cheaters and liars and manipulators and frauds. And I'm not going to quit until we win. So that's all. Just wanted to share that. If you start to see that on X, or I don't know, maybe more positive, like some of you guys might say, wow, you know, I like what he brings. I see his intelligence. Sign me up. Okay, great. So that's all I want to say about that right now. Let's just finally wrap up this video and come back to the summary, which apparently got cut off. Um, so by any, yeah, I kind of wish that wasn't cut off, guys, but that's all right. We can see most of it. All right, so AMC is undervalued by objective metrics. Like, check. You guys just saw that. Any squeeze pressure is going to be on top of those valuations I said. So just imagine, you know, when he moves out the debt, I keep talking about that as kind of a bomb on the shorts. When he starts delivering profits, which I've said very clearly, I think those are coming in just a couple months. You know, the back half of 24, I think is going to be amazing. Um, and then 2025 is even more amazing, and then 2026 is even more amazing. So as he starts to show, he being Adam and really the whole management team, delivering these profits, you can just watch the amount of pressure there's going to be on the shorts. And my last video was looking at what our short position is, the squeeze update. You know, there is a what I would almost call a radical amount of shorts on AMC right now. And that's not even talking about things like tokens or synthetics or various ways they hide things in the options chain. So to think about the pressure, upward pressure from valuation and business results, and then to combine that with potential squeeze pressure, you know, I've always said I'm not putting dates or numbers on that. Like, I just don't name dates, I don't name prices. I'm not going to do that. So my thesis, when the market, real or otherwise, so that's kind of a joke about the manipulators, accepts AMC's survival. That's why I also think that 2026 debt, when that gets refinanced, that's a bomb on the shorts. Because when the market finally says this is a done deal, even though you and I believe it's a done deal, and I can say that with a lot of confidence, but when the market has to finally bend its knee and accept that AMC is not going bankrupt, then I believe the laws of sort of value and finance are going to force the issue, which is why I've been so loud for so long. And then, you know, as always, my thesis is also we will win. Let's go.